Well, the consumer is hanging in there this morning. September retail sales coming in much hotter than expected at 0.7%, more than double what the street was expecting. So that number providing food for thought for markets and for the Fed. But how are individual investors actually feeling? Well, Investopedia's latest sentiment survey says that individual investors are facing their fears. 29% say that they are investing less lately. 2/3 fear that the market has further to fall. And 43% say that they are worried about the stock market. Joining us now is Caleb Silver, Investopedia's editor-in-chief. And Caleb, let's talk about the econ data that we're getting and comparing that to some of the activity that we're seeing from retail investors. Because when you take a look at some of these econ prints, like retail sales out this morning, you would think investors, or consumers, I should say rather, are feeling pretty good. Yet it seems like retail investors are shifting their tune just a bit. So I guess, how would you characterize their sentiment right now?
Yeah, this is as cautious as they've been all year. They had been as cautious during some of those rough summer months. But people may fear something, but still do something. They may fear their personal financial situation. They may fear a recession, but they're still going to keep spending. We're very, very good at spending here in this country. It's like a sport for us. So you see the retail sales print. That's just another indication that while we may be worried about things, we're still going to spend. We're going into the holiday season. People like to spend a lot of money there. On the investing side, we've seen a real pullback in people putting money to work. And you can see outflows month after month after month in mutual funds and equity ETFs, and a lot of money flowing into cash, 5.6 trillion in money market funds.
And so to marry the two together again here, when we think about one kind of that sits in the Venn diagram, if you will, it's student loan repayments as well here. How have some of the investors either looked at some of the most perhaps exposed companies to student loan repayments in the retail space, and also married that with the data that came out today, seeing areas like apparel take a hit month over month, and then of course year over year as well?
Right, you see it in the discretionary spending, right? That's where that $350 a month on average for those borrowers is not going right now. On the other hand, you see a lot of staples being purchased. People are still traveling. Revenge travel is still in full effect. If you've been on the road lately, you know what I'm talking about. So people are still willing to do that. But the other discretionary items, they're taking a hit. And in terms of what we do with extra money, we always ask our readers every 2 months, what would you do with an extra 10 grand if you had it right now? Most people, they'd put it in the bank or they'd buy CDs. They're not buying stocks with it. Nobody is willing to walk out on the diving board of risk right now because it just seems too uncertain, and uncertainty is like kryptonite for investors.
Good. When it comes to a lot of the reasons here that investors are feeling a bit apprehensive, a lot of it obviously has to do with the Fed's action, inflationary environment. But what else tops that list in terms of why they're a bit nervous at this point?
Yeah, well, there's inflation that's been around us for a long time. Geopolitical uncertainty heightened, obviously, in the last 8 to 9 days. But even before that happened, we were asking them, what are you worried about right now? And the second thing on that list, the 2024 presidential election. And I don't think that is who's going to be elected and what's that going to mean for policy. I think it's going to mean, I think they're thinking about the unrest that's probably going to come with that, given what we saw in the last couple of elections. So I think people are worried just about the climate in general right now. There's a lot of uncertainty there. And then they're worried about higher for longer interest rates. And we've seen that play out across capital markets right now. A lot of money in cash, a lot of money in CDs, and not a lot of money being spent on things like stocks.
Is there any correlation that you're seeing between what the banks are telling us right now in their earnings and where investors are placing their own, not just money, and allocating or perhaps reshuffling some of their investments, or repositioning, I should say, to be more kind of studious of the game out here, I guess. But at the end of the day, is there any major pivot that's being ensued right now, as even when we're hearing from these banks, they're saying that their wealth management and their asset businesses are also the areas that are taking a hit right now? Yeah,
and you would expect that right now. You see a lot, very little lending going on. We're seeing as low lending levels as we've seen in a long time. Plus, we have new bank rules, bank reserve rules that may be coming down the road here in a little bit. So banks are tightening up, not a lot of people borrowing. But when we do look at what people are searching for on Investopedia, we like to check that out every couple of days. What are people actually searching for? Yeah. A lot of people are still looking for best CD rates. A lot of people are also looking for ways to tap cash, whether that's the best personal loan or the best cash advance cards. We hate to see that because that tells you that people's personal finances are the things that they're most worried about right now. They're worried about what's going to happen in their households, not as much about what's happening in their portfolios. That's why they're not putting a lot of money to work, and that's why you've seen sort of this outflow month after month, especially in the ETFs and the mutual funds.
Caleb, when we talk about consumer spending here and kind of marrying that to what we're seeing play out in the market, consumer discretionary, a handful of consumer staple names have been under a tremendous amount of pressure, actually a group of them here, right around their 52-week lows. When it comes to what we need to see in order for a rebound to happen within that sector, is that all hinge on inflation, or what's going to bring back the confidence?
Inflation's a part of it also, but that notion of having higher interest rates for longer and I can keep my money in the bank at 5% versus putting it out there, either buying something or buying a risky asset, I think that's a big deal. Maybe earnings would be the catalyst. A lot of people were hoping for that. And we've had 3 quarters in a row of downdraft in earnings. This one might be a little bit better. I just don't think that's the catalyst, because when you have a 4 to 5% handle on the 10-year bond and you have a very strong dollar, well, that's exactly what stocks hate to see. Investors run the other way when they see that, and they're pretty comfortable hanging out in cash, hanging out in 5% CDs, hanging out with mattress money, literally, not spending money at all, except when they want to on those retail purchases or those holiday purchases or travel. So you have this kind of tight-fisted consumer right now, not really willing to walk out into the deep end.
All right, some of those consumers might need to find another mattress soon if they're just going to keep stashing it here. Our own, not our own, Caleb Silver. You feel like our own. You're like family, basically.
Family.
Caleb Silver, Investopedia editor-in-chief. Great to see you here this morning. Absolutely.